Hi, Josh. Thanks for coming on. I'll give a bit of an introduction to yourself, but I'll let you go into a lot more detail. So we have Joshua Tharby here, property tax specialist. Many of you have probably seen all over Facebook how he can help you save tax, especially in the property industry. So welcome and thanks for coming on.
Yeah, my pleasure. Thank you very much for having me on. I'm excited to be here. Hopefully drop some fantastic tax saving tips and reach out to your audience.
Yeah, definitely. So, I mean, we'll touch on it throughout the podcast. You've got a lot in the pipeline anyway. Like I say, we'll go through. So just a little sort of teaser. If anyone's interested in moving abroad or into Dubai or something like that, then prick your ears up and listen in because there's some good content coming. So Josh, just before we do go into all the exciting content, let us know, how did you get into property tax? What's your background? Where did it all start for you?
Yeah, absolutely. So I've always been interested in property. Even when I was at school, I used to when I was on sick days and stuff like that, I used to sky off school to watch Homes Under the Hammer because I used to look at the numbers they were making, think, wow, if I work hard at school and, pay attention, I'm going to make £20,000 a year, £30,000 a year as a job. And this person, Homes Under the Hammer, has made £50,000 in 6 weeks. Like, Mum, why am I going to school? I can do property. So I've actually always been interested since that side of it. But then unfortunately, my mum made me go to school and actually finish that side of it. But I've always been interested in property and what it can do. So that kind of stayed with me through the years as I went through kind of my accountancy training. I've always been interested in property, always, wanted to invest in property, but kind of realized you need a real job to go alongside it because you need money to get started in property for the most part. And then, property, it's a slow burner. So we kind of went through that rigmarole, trained as an accountant, but whilst working with property investors and developers as well at large firms. And then really, you kind of get to the stage where a lot of people were still not happy with their accountant. They weren't property tax specialists. So as a result, there was a massive kind of gap in the market for a unique niche property tax advisory service. And that's why I founded JSM.
Perfect. So, how long have you had JSM? Or how long have you been set up on your own for the property tax specialism?
So we've been trading with JSM for just over 3 years now. But prior to that, I was working at McIntyre Hudson, where I was working in the tax team as well, working with property investors. So I've been in property tax for a while, but with JSM, we've been trading for just over 3 years.
Oh, fantastic. And is it just yourself in JSM or do you have other partners in that as well?
I'm the only partner. Then we've got accountants and support staff as well to help us deliver our service to clients.
Oh, brilliant. So it's not a one-man band. You've got a team around you, like you say, to deliver that service to the clients.
Yeah, at the moment, a team of 6 and growing, pretty much every month.
Fantastic. You're very present on social media as well. I see, a lot of the posting, you do some tax tips. From memory as well, did you set up like a few-day property conference type thing?
Yeah. I think that was probably 2 years ago now. So this is peak lockdown. And what we did was it was the property conference. And I think we ended up raising about £20,000 for the NHS during lockdown. So what we did, it was basically did the whole thing, worked with other kind of property kind of coaches, trainers. They basically said, what can you donate in terms of training and presentations, try to get people to donate as well throughout the event. And yeah, really, I think a 3-day event in the end and raised just under £20,000.
Oh, fantastic. I remember that actually. I remember tuning in. I was in full-time employment at the time, and when I weren't in meetings, having it on the iPad on YouTube because it was live streamed, wasn't it, through YouTube or Facebook?
Yeah, live stream. Yeah, YouTube, Facebook. Yeah, we were everywhere.
So just for people who may not have actually come across it, there is a lot of good content on there, and it's everything from property tax, finance, developments, all sorts of stuff on there, isn't there? So
and it's also available on YouTube as well. So if you go on my YouTube channel, Joshua Tharby, if you go down to the earlier stages, I've posted hundreds of videos since then. If you just type in property conference or go back about 2 years, you'll see all the videos on there in different segments with a nice thumbnail showing exactly who's talking and what it's about.
Yeah, no, it's definitely a lot of value on there. I learned a lot from it anyway. So going back to tax then, this is probably a contentious issue. There's a lot of issues in the current affairs, the news at the minute with Rishi Sunak and his wife around tax. There's two. I was having this conversation the other day. So, without stereotyping, there's a lot of people who say, oh, you should pay tax. You should pay as much tax as possible, blah, blah, blah. But then there's also, on the other hand, is if you're already paying tax,
Yeah.
why would you have to pay more tax than necessary? And you'll know the law ins and outs, but I think there's a clause or there's a part of the law that says, you're obliged to pay tax, but you're allowed to mitigate it as much as possible, pay as less as possible, as long as it's legal, if that makes sense.
Yeah, exactly. I think it was, I think maybe the Duke of Westminster case going back probably about 100 years now, maybe a little bit less. And it's basically where the courts determined that a taxpayer is entitled to arrange his affairs in such a way as to minimise the amount of tax due under the law. So yeah, that's exactly it. People should be allowed to do what they can to pay the least amount of tax, because quite frankly, if you don't, the amount of tax you pay as an individual, you pay corporation tax, income tax, you pay national insurance, VAT, there's all these different taxes. And for small business owners, it can be a crippling amount of money, close to 50% for a lot of business owners that they're actually paying tax.
Yeah, so that sort of led me on to my next question. I was going to ask, what type of taxes are there that, a sole trader or a limited company or a business owner, whether it's a property business or another business, what sort of taxes are there that people, should be paying? And I think you touched on them all anyway, but are you able to just sort of go into a bit more detail on each one of
Yeah, 100%. So I suppose VAT, I'll start that one because it's the easiest one, in that everyone pays that in every walk of life. You go into Costa, you buy a millionaire shortbread, a coffee, it's got VAT on it. So everything you buy as a consumer, pretty much except for a small amount of things, nappies, child's clothes, things like that, they don't have VAT on it because they're deemed to be necessities. But the vast majority of things, fuel as well, you've got fuel duty on that. But most things that you buy, you've got VAT on it. You can't really avoid that for the most part. But then the main two that you'll pay is income tax. So as an employee of any company, you're going to be paying income tax on your salary. If you're taking a salary or dividends from your own company, you're going to be paying income tax on them. If you're a sole trader, income tax as well on your profits. And then as a property business, you also pay an income tax, but this is where, as a property investor operating for your own name, you no longer pay income tax on your profits. Because of the Section 24 side of it, you actually pay income tax on your property profits less, well, with no deduction for the finance costs. So that's what's made it even more unfair, and it's created that divide between property investors and everybody else because the profits are now calculated differently.
Yeah. No, totally agree. And that was something that was phased in over the last few years, wasn't it? I can't remember when the final year, but it went from like 25 to 50 to 75 to 100 or something
over
like that.
4 years, with last year being basically the first year
was
fully deducted. So for most people, some people still aren't aware of it. So typically, usually if you had £10,000 worth of rental income, basically rental profits excluding your mortgage costs, and you had £4,000 of mortgage costs, historically speaking, you've got £10,000, you deduct your £4,000, you're getting taxed on your £6,000 profits. That's how it works every other business, because that's the cash you've got in your bank. Whereas now HMRC have said you don't get any deduction for those mortgage costs, so they're going to tax you on that full £10,000. But what you will get is a 20% tax credit on that £4,000 worth of mortgage expenses. So if you're a higher rate taxpayer paying tax at 40%, historically, you would have basically got tax relief at 40%, being 1,600 quid. That's going to come off of your tax bill, whereas now you only get 20% of the £4,000, being 800. So actually £800 a year worse off because of the way they've changed the laws to basically increase the tax revenue.
And that's only on 10K's worth of income. Now, you imagine that prorated on some landlords who have probably, amassed a portfolio over 30, 40 years in their own name, because back then it was more common, wasn't it, to do it in your own name?
It makes sense.
£200,000 a year revenue.
Well, that's another thing as well, is when you get to £100,000, you start to lose your personal allowance. And the number they take into account is your profits, not allowing the deduction for your mortgage interest. So for some people, you say, for instance, you've got large numbers where you've basically pushes you to that £100,000 and over, you're still going to lose your personal allowance, which means you'll be even more worse off than you would be, because it's artificially pushing you into those higher boundaries where you start to lose your personal allowance, where you can no longer make large pension contributions. If you've got child benefit as well, it results in that being clawed back. So in that cases, we've seen effective tax rates on property income in your own name of about 150%, because it results in all these other benefits or personal allowances being lost.
Yeah, and that's, when you look at that 150%, that's a huge amount. And especially when one, if you don't know that massive tax bill you get at the end of the year, you might not have that money available to pay that tax bill because of, the way you're used to living. So it's good for people to sort of understand this, and I guess that's where it comes to. The fact is, if you're paying all this tax, and it can affect you significantly. So it's good to have someone like yourself, specialist in this area, who can advise and make sure that people are mitigating as much as possible. Because I think you put a post up the other day, but let's say you're a company and you've got 10 employees. Everyone says, oh, you're not paying much tax, but there's tax through paying the employees, national insurance contributions. If you take any money out of your business, you're paying tax on that. There's so many different ways that you're going to be paying tax just for running a business. Like, why pay 10, 5, 7 lots of taxes when you can mitigate that? And because at the end of the day, you still need the business to survive, to run, because when you grow, and whether that's by mitigating tax or sales, everything contributed together, you're still offering other people to contribute to society and the economy by working. So it's very interesting to know about that. And I just want to touch on allowances or any reliefs. So obviously you've got the tax side of thing, but there are also reliefs available to landlords, and there's grants, there's schemes. Any come to mind that you think sort of beneficial? One thing I think of is capital allowances. So electric vehicles, prop tech, 150% capital allowances on that. Serviced accommodation, there's capital allowances on things like that. Is there anything you want to touch on with regards to reliefs?
Yeah, absolutely. So I suppose the first one is normal property investment. You don't really have that many reliefs around it because it's investment. You don't tend to lose money. So as a result, HMRC, they don't want people going into it. So there are very few reliefs on pure property investment. But it's about seeing kind of what the government want you to do and what tax reliefs there are, because that can make the difference between making money and losing money. So if you think about, if you've got property in your own name now, and then you're paying tax at 150%, so you actually pay more than you're making. But could you switch that to a serviced accommodation unit? Because if you're using it in your own name as a buy to let, you're not getting your mortgage interest. So that can result in you losing money. But if you can make that property work as a serviced accommodation unit, you can then deduct all of your mortgage interest in full. You can get capital allowances on the integral parts of the building as well. So that's going to be a further tax deduction. You've got the money to enjoy personally. If you wanted to gift the property to future generations, you can potentially get holdover relief, which means you can just give the property away. They get it at the cost that it's required to use, so you don't have any capital gains tax to pay now. And if you sell the properties as well, you can also get business asset disposal relief, which means you just pay 10% tax. But all of those reliefs there are only available if you use it as service accommodation. So it's kind of about knowing what the opportunities might be to see if you can make that work and see if that's going to help you make more money.
Yeah, and I guess, for those who have their own buy-to-let portfolios, who may not consider, well, they might think, well, I've got a tenant, it can't be used as service accommodation, it's not in the middle of Cornwall, or it's not in the middle of there. There's so many different demographics out there that require contractors, for example, near the city centres. If you've got a property 15, 20 minutes from the city centre, it's something that you can change up.
Yeah, it's massively changed, hasn't it? In terms of, it's not just holiday accommodation, that service accommodation anymore. It is literally, we've got in Peterborough alone, you'd think, why would service accommodation work in Peterborough? There's nothing here, but it's booming for service accommodation because you've got redevelopment, you've got contractors, and there's all of that opportunity.
Yeah, exactly. And likewise here in Hull, I own a lettings and management company. We've just had, we've agreed 2 company lets recently with people I know. But I'm also negotiating another one. The blokes actually went to me today. If I'm signing up to a 3-year company let, do I even need an agent? Because obviously it comes for us. Well, my career today is you can do all the referencing yourself. You can manage it yourself. You can deal with the the company. You can sign all the agreements. You can find all the company let agreements. You can find. Do you know what I mean? So yeah, you might sacrifice 12%, but for the headache, is it worth it? So, there's. I guess you just sort of have to reach out and look in your area if there is a demand, which if you're living in a city, it's 90% probably chance that there is a demand for serviced accommodation. I mean, you've probably seen it. Would you say there's been a shift in your clientele from buy-to-let landlords to SA landlords, or trying to do the transition?
Yeah, I'd say it's definitely, I suppose the one with, there's not necessarily a transition in terms of those that are, from my experience, the ones that have kind of been in buy-to-let, they've either stayed there and gone into a more tax efficient structure like a limited company or simply do the savings tax, or they've just sold up. Because I think most people that own property, they kind of wanted the passive nature of it.
Yeah.
Whereas by the time you get into the service accommodation side of it, you do get those tax benefits, but it is a different business. You're dealing with tenants. You're in a hospitality sector now,
Yeah.
rather than if you've got a letting agent who's dealing with it all. Property is typically quite passive unless you've got a lot of stuff going wrong. For most of the time, our tenants we're not heard from for months, so it is passive. But with a service accommodation business, it is hands-on. Management agents, there's a lot more transactions, a lot more basically touch points, and as a result, there's a lot more friction.
Yeah.
So a lot of property investors don't really want that, which is why the ones that have been in buy to let have probably just sold up and not gone into SA. But we do have a lot of people now that have just started up and gone straight into SA.
Yeah. So yeah, you're seeing I guess a different clientele or more in that area. Brilliant. So it's definitely something I'm looking at as well, just because of the benefits. Doing a commercial to resi as well, so there's relief there as well, isn't there? With like the VAT 20% reduced to 5%, capital allowances on office blocks, etc. So
yeah, and even with the developments as well. So if you're converting anything that's basically contaminated land remediation relief, you get 150% deduction. So if you're converting stuff where there might be a fuel station, fuel tankers, anything like that, where it's contaminated soil, Japanese knotweed, asbestos, things like that, you get the additional tax relief when you deal with them.
Yeah, and to be fair, there's probably someone listening to this who doesn't even know any of this, and this just comes from listening and learning, doesn't it? And reaching out to people. And unless you sit down with someone and sort of discuss your affairs, you're not really going to know, are you?
You don't. It's impossible. You don't know what you don't know until you hear something for the first time. The only way you're going to do that is by opening your ears and just speaking to people, seeing what they've got going on, seeing what reliefs they know about, and then when you kind of pick things up, just see how it could apply to your situation.
Yeah, perfect. So I touched on earlier about like the international side of things. I just want to like sort of discuss what is your sort of focus going on now. Obviously, you're doing everything you do in JSM in property tax, but you're moving your affairs abroad, or some of them. Sort of just touch on that and sort of let everyone know what it is you're doing, because I'm sure there'll be a lot of people who are excited.
Yeah, absolutely. So what we've found is especially the larger property investors, they've not made their money through property. Historically, the best way to build wealth is you've got a trading business, something that generates cash flow, which is going to give you money to live off, and then hopefully a surplus. And then what people start to do is invest that surplus into real estate. So what people have is a trading business, and then usually an asset holding business as well. So invest in property, commercial property, development, wherever it might be. You have the two different structures. So whilst we were kind of typically working with just property investors, we also had the trading businesses, the high net worths, that wanted that tax advice in terms of overall tax efficiencies. And quite a lot of them, as they reach the kind of later stages, they realize that the UK might not be the best place for them. There are better options available in terms of living overseas, and most importantly, structuring some of their businesses overseas as well. So that's something that we've gone through in terms of, we've got a company set up over in Dubai, which is where we're going to hold a lot of our intellectual property. So a lot of people now, if you're doing masterminds, coaching, online course sales, kind of even YouTube influencers, if you're making money from YouTube, that shouldn't need to be taxed in the UK, because any single company based in any country could hold that business. And as a result, why would you voluntarily pay 25% tax in the UK? Because that's what the corporation tax rate's going up to from April 2023. So next year now, when you could potentially put that in Dubai as an example, where it's currently taxed at 0%. So immediately that's a 25% saving just by that one single decision. And then when you look at other possible ideas of such as moving to Dubai or spending a couple of years in Dubai, amongst other countries as well, that's where you can actually look at being more tax efficient as a whole.
It's very interesting. Just a couple of points on that then. So if you're, let's say, an influencer, or let's say I go out tomorrow and I start a property training company, probably only have about 3 people on it, but let's just say hypothetically, do you have to train in Dubai? Do you have to be in Dubai to deliver the training, or can you be in the UK but still have it running through Dubai? How does that work?
The biggest one in terms of where the company will be taxed is technically, jargon speaking, it's basically the place of central management and control. So it's where are the board decisions made? where are the management decisions of the company made? So potentially, if you've got somebody who's resident in Dubai, potentially being as a director of the company, that might help your argument with HMRC to get into that challenge. Or if you just fly out there 4 or 5 times a year, to basically run the company over there. So only when you're over there do you make the decisions.
Yeah.
If you're making courses, if you make the courses whilst you're in Dubai, and then, as soon as you've got a funnel set up, you've got your ad spend, it's automated from that point onwards. You come back to the UK and the Dubai bank account just keeps making sales and the orders automatically fulfill themselves. That's the kind of simple way of looking at it.
Yeah.
But that's what's possible in the long and short of it.
Yeah, and I guess, like you said, there's 25% savings, corporation taxes going up due to COVID, paying back all of the losses, etc. So you think a company that turns over hypothetically 500k, 200k, 400k, it's a huge saving, which could be a huge dividend for someone to enjoy, especially if you're out in Dubai.
Yeah, those numbers, they seem like quite high, but they're realistically achievable as well. For most people doing kind of any kind of online course, mastermind, any kind of digital product, you could easily do 100, 200k, and a 25% saving there, that's £50,000. So realistically, if you were to go to buy 4 to 6 times a year, a couple of grand a pop, you're still saving a lot of tax, probably close to 30, 35k, and you're actually getting the privilege of going to Dubai each time as well, and still saving money for doing so. So it really is kind of a win-win.
Yeah, definitely. And there's been a lot of regulation changes recently in Dubai, because the way Dubai is moving is, they have around 20 million tourists a year. They want to achieve, I think it's 50 million tourists by 2050, maybe even sooner than that, 2040, 2035. But they're putting money in. They're making businesses a lot easier for other people. Or especially expats. I think it used to be that you needed a director or a major shareholder if setting up a business that had to be an Emirati.
No, that's not the case.
Well, it used to be, didn't it? It's recently changed, yeah.
I've literally set up a company without even needing that. They've sent the forms over, I've sent them back. Need to go there to get the visas sorted. So I've got to have a blood test, take fingerprints, and all that kind of stuff when I go in a couple of weeks. But aside from that, everything's been done completely online by the solicitor over there. So
just quickly, I had a call because myself and my business partner are looking at buying, like I said, offline, like an apartment in Dubai. Why? Because you don't get taxed. Do you need to have it in a company?
So if you wanted to, because at the moment, say people like that, we're still UK resident. So as a UK resident taxpayer, you'll pay tax on your worldwide income and gains.
Okay.
The only time you'll have an exception to that is if you're a non-dom, such as Rishi Sunak's wife, which is when you're a non-UK domicile, which basically means you weren't born in the country, or your father was born somewhere else. Only then you can claim the remittance basis. And what that allows you to do is basically say to the government, we won't bring any of these overseas income and gains to the UK. So, please don't tax us on them. That's the kind of simple way of looking at it. And that's what Rishi Sunak's wife was doing. All perfectly legal, although now she's decided to actually pay tax on her gains because of the press, which we won't get into. So if you were to own it in your own name, that's what you'd be liable to do.
Okay, that makes sense.
If you've got a limited company, because a limited company is a separate legal entity, as long as, say, for instance, the company I've set up over there, as long as I don't pull any money out of it now, there won't be any tax on me in the UK. So it's kind of a long-term play, and that will build wealth up in that company. Then either later on, I'll pull it out if I'm a UK resident and pay some tax on it, or I'll pull it out and extract the wealth when I'm a non-UK resident in a couple of years' time. If I was to live in Dubai, Malta, or Cyprus, or become tax resident in any of these kind of favourable countries, that's when I'd pull it out to take advantage of the lower tax rate that would apply to me then.
Yeah. Are there still taxes to pay on? Well, I suppose in some countries there will be, but like, for example, Dubai at the minute is zero, isn't it?
Dubai is always easy to talk about because it's all zero.
Yeah.
So if I were to become a tax resident in Dubai, I could pull out whatever money in the company, basically pull it all out, and then I wouldn't pay any tax on it. There are some anti-avoidance rules which apply to UK income. So if you wanted to say, if you had a UK company, for instance, and you wanted to rinse out all of the dividends whilst you're in Dubai, you have to stay overseas for at least 5 years, because the aim of this is to stop people just going out there for a year, taking £500,000 of dividends and then coming back the next year and saying, thanks HMRC, I've not paid any tax.
Yeah, of course.
For a year. So the anti-avoidance there is that you have to be overseas for 5 years for most people.
But if you're building a business over there anyway, and the business is based there, it's okay, isn't it?
Yeah, but even if you've got business in the UK, for instance, and you've got £500,000, £1 million of retained earnings, and you think, well, you only take 50k out because you don't want to get rinsed from a tax point of view. If you were to go to Dubai for 5 years, pull out all of that 100k or all that £1 million of dividends, pay no tax on it, then you can come back to the UK afterwards. You've got your £1 million in cash, you're not paying any tax, and then you can basically just start again.
That's crazy, isn't it? And it's a lot of, I'm sure there's a lot of people that'd be interested in that, and
Yeah.
just to save the money. And that's a way of increasing your wealth and building your wealth, isn't it?
Yeah, exactly that. Because if you think the amount of tax you pay, when you look at the compounded effect of it, of actually paying tax at 30, 40, 50%, over the periods of time, it has a really significant impact on the actual wealth you can build. So even with the tax-free Dubai side of it, so with the company in Dubai, if you've built wealth over there, you can still loan that money from the Dubai company to your UK property investment company. So you can do that tax-free without you personally paying any tax. And you can also charge interest on the loan as well.
Yeah.
So if your UK company can pay, say, 10% interest for borrowing 100K from your Dubai company, that is then going to save you more tax in the UK, because that's a tax deductible expense, and put even more money from the UK company back to the Dubai company where it's tax-free.
Yeah. Mind blown.
Yeah.
I just got one question. It's probably more of a personal question, but if you were to buy a property out there to run as a serviced accommodation, would you think it's better to set up a limited company over there? Can you loan the money from UK business to a Dubai limited company to buy the asset? Do you still have to pay tax on that? Because I know it's a loan.
Yeah, you could loan the money from your UK company to the Dubai company. And then as long as you've got the Dubai company, that wouldn't pay any tax essentially on the profits.
Yeah. Is it when you pay the loan back, it'd be a direct, so you pay the loan back?
If you pay the loan back, then that's all tax-free as well, because it's just your repayment of a loan.
Yeah, of course it is.
And the only time you'd have to pay any tax is if you declared that you took a salary from the company or dividend.
Yeah. But you just leave it ticking over there over years anyway, wouldn't you?
Leave it there, leave it in there, buy a second one, a third one, fourth one, and just keep reinvesting it. You've got your UK businesses, which pay for your life over here. Basically, keep that limited company separate, don't take anything from it, and just keep building it up.
Have your annual meetings over there, have 4 holidays a year, that pays for your flights, it's working well.
It's all about kind of just making the world work for you. Because, most people were born in the UK, we live in the UK, we die in the UK. Most importantly, we pay a hell of a lot of taxes in the UK. Whereas, the world's a global place. You can fly to countries quicker than ever before. It's about looking at the world as a kind of a global playbook and seeing what works for you. What countries are going to offer you a better quality of life, better taxes, better banking, better education, even better healthcare.
Yeah.
So looking at what the world can do for you and pick and choosing and take advantage where you can. Yeah,
well, I second. I lived in Australia for a year, and it was one of the best years I've ever had. Regardless of business and tax aside, just the lifestyle benefits you have. The warm weather, you're outdoors, active. You're not sedentary as much. They encourage healthy lifestyles, living. And I said I was out there for a year. I'd go back in a heartbeat. But
exactly that. When it's cold and raining in the UK, you come home and have a microwave meal, or if it's nice and sunny, you have a grilled barbecue, fresh meats and salad. Which is going to be better for us as human beings?
Yeah, exactly. So many good points there. Obviously, you've touched on obviously your plans, what you're doing over in Dubai. How can you help other people do that as well? Is that a service you're offering? Is that why you're setting this up? Is it a separate entity for business owners, property owners, anyone really, if they want to get in touch or find out more about this? Is there something that you're offering, or is there how can they go about
exactly that? So it's exactly what we're doing with our new Dubai venture. It's basically working with wealthy internationals and basically business owners, entrepreneurs that do want more. We've got two business. We can help you with the UK tax side of it as well. But people that do want more, we can help you identify what countries are going to be beneficial from a tax point of view, the UK tax implications of moving overseas, moving your business overseas. How long can you come back to the UK for without being pulled back into the tax net? Basically helping you come up with this international tax plan to create a better quality of life for yourself and save a lot of tax at the same time.
Wow. And you mentioned before you're doing a training, a live training.
Yeah, so that's for anybody that wants to know more about this. This is the first place to start, really, because we're going to run through basically what this is. Is it for you? What hoops you might need to jump through? What are the advantages? What are the cons? Not everybody wants to move to Dubai, for instance. So we're running through all of that. It's a live training. It is. What's the date of it? I think it is.
I think you said the 15th of May.
Yeah, so it's the 15th of May at 6 o'clock, but it is a recording as well. So if anybody that doesn't attend the live one, you will get sent the recording. I think we're going to put the details in the show notes, but if anybody that's listening, it's bit.ly/living tax free, all lowercase. And what that'll do is that'll get you access to the launch price still because it is going to go up from today onwards to get you access to the launch price for everyone listening to the podcast. And there's also the option there to get kind of a full overseas tax strategy pack as well, if you wish. So I'd definitely recommend checking that link out.
Yeah, and it's only you think 99 quid, you could probably save heaps more of that in one tax saving, can't you? So it's
absolutely
good return there.
Yeah, with a full money back guarantee, anything we do, because we're so confident in kind of what I'm saying to people, what we can deliver, there's a full money back guarantee as well, full 100% guarantee. And then, yeah, you know, like you mentioned, 99 quid for what could potentially be millions of pounds in tax saving.
Yeah. And like
that's
you said,
not a good ROI, I don't know what is.
I know, yeah, it's probably one of the best that you'll ever see, isn't it? And like you said, I'll put all the information in the show notes. Obviously, your contact details as well. There might be someone who, you know, might not be available, but even if they pay for it, like I say, they'll still get the recording afterwards, whether they can get on there or not. You know, I'll put links to your pages as well, so people can contact you direct if that's okay, or
yeah, absolutely.
Like
yeah,
say, I'll put your email in or something like that. So, you know, there's a lot in the pipeline for you. You know, have you seen a sort of a huge scale in your business over the last few years, and you know, what do you think you owe to that success? Has it been easy for you? Has it been something that you've had to work really hard on?
Yes, absolutely. Yeah. In terms of kind of where we were, say 3 or 4 years ago, you know, nothing. I just left my job on a kind of 27,000 to 30,000 pound a year salary to where I am now. Yeah, absolutely. In terms of what has been achieved in such a relatively short period of time, say 4 years, it didn't feel like a short period of time when I was stuck in the middle of it, grafting away. But looking back, it's, you know, 4 years out of the next 50 years, it's a short period. Absolutely, yeah. In terms of what I'd achieved, I never thought I'd kind of get as far as I have done or achieved so much in such a short period of time. But I think the main things are, yeah, basically you've got to work as hard as you can in terms of, especially when you just start out doing anything, you're playing catch up because say for instance, the accountancy business, there's so many other accountants that are already out there established that are doing it. They're working 5 days a week. So I had to basically work 6-7 days a week to catch up for a good couple of, probably the first 2 years. It was kind of really hard graft catching up. And then to maintain it as well, we're just kind of looking what we could do differently to not be that normal boring accountant that everybody has, to try and get noticed, to get the attention of the marketplace. So that's 2 things. And I say that the last one as well would just be make sure you are setting big goals, because if you just set a goal in your head that you want to hit 100K income, then you'll get there. But if you set a goal in your head where you want to hit 1 million and you hit 750, because, you know, you're just still setting the same goals essentially, but because you're basically amplifying that, you'll be amazed at what more you can achieve by pushing yourself.
Yeah, definitely. It makes sense. I remember I used to work for a company. They used to call them a big, hairy, audacious goals.
Yeah.
BHAGs. Yeah. Like you say, I always, when I set my goals or revenue targets, I always set them quite high, because you think if I hit it and I'm aiming to hit it, fantastic. If I fall a bit short, you know, I've still done pretty good, which I think is quite important. I'm sure you won't mind me saying, I think you did a post, it was on social media anyway, like I said, you're present there. Was it from 0 to 500,000 in a certain period of time? Was that the figure?
3 years. Yeah, that's where we got to in terms of recurring revenue turnover for the accountancy business.
Yeah, and you know, like say in a short space of time, 3 years, it's quite a tremendous growth.
Yeah, I suppose that's just because I've always pushed. In terms of further read, if anybody is Grant Cardone, the 10X rule. That's kind of one of a fantastic book. Read that years ago. It's basically, yeah, typically most accountants, I could say, you know what, if I was earning £30,000 a year as an accountant in my last job, if I make 100,000, that's it. I'm having a really good life. I've completed it. Whereas realistically, I didn't set that goal of 100,000. I set a goal of I want to get to 1 million in 5 years. Whereas most people would set 100 or 200,000 because it's realistic.
An incremental growth, isn't it? Yeah.
Whereas we've basically set these really massive goals and thought, actually, we need to work hard, we need to work smart, we need to do things differently to get there. So we've set the big goals, and then we're going to back it up with big action in order to get there.
So how, just stripping back, how or what, I should say, what do you owe to success? Like, what do you think have been like maybe the top 3 things for you to scale your growth even quicker? Like I've touched on it a few times. I've touched on it in a lot of other episodes. And the reason I mention it is I'm not out there on social media as much as I can be. By the time I actually think about doing a post, it's 7 o'clock at night, fed my daughter, she's in bed. I just feel I'm not going to start doing videos and all that sort of stuff now. Do you know what I mean?
Yeah.
I see that you are active on social media. A lot of other people who are successful and growing quickly is social media. do you owe, like, what's your sort of thoughts on that? And are there any other things that, running in parallel or has synergies with that to increase your growth there? Just for people starting out, like a few tips, maybe what they can do to help.
I'd say absolutely. I've got to owe the majority of their success to social media, in that it's allowed me from day one to have a platform to spread my message, to spread the information. Going back 20 years ago, if I didn't have social media, how would I have marketed? I'd probably doing free seminars, something like that. I'd have found a different way, but having social media that's free, easy to use, available 24/7, people are on it all the time, it's definitely the main thing that's allowed our business to scale as it has. Most other accountants are not utilizing social media, so it was a differentiator in that all these property investors, there are groups full of property investors, 15,000 property investors in one place. If you're a tax accountant, where's the best place to be? In a group with 15,000 of your ideal potential customers just sitting there. So if you could post a video in that, get in front of them. So definitely using social media is the first one. And I'd say the second one is just making sure that you are an expert. So make sure you know what you're talking about and you are coming across as sharp as possible in terms of the information you're saying, making people know, like, and trust you. Because if I did a video where I was sitting there in a baseball cap, not talking very well, not saying the necessary correct information or the best well-presented information, social media is great, but it's not going to work miracles. You have to get on social media, get the videos out there, but then also make sure that you are doing your bit to convince customers that you're the best person for them.
It's that value piece, isn't it?
Yeah.
There's a lot of people that post for the sake of it. When I post, I probably post some stuff for the sake of it, just to put an update on my progress.
Yeah.
But it's documenting your journey. People are seeing you active.
People like both of it. You need like a good mix, especially when you're using it for business purposes, to try and get customers, to show that you're an accountant, you're a tax expert. But also, when you do that enough, people become invested in you and they like knowing how you're doing, what's going on in your life. So they do like the personal ones as well. And it's about getting that balance, because when you have these people on Facebook, they see you so much and they become your friends. You meet these people, I might not have actually spoken to them before, but you meet them at a property event for the first time and they've been following your journey for the past couple of years. So they know absolutely everything about you, including all of the things that you've posted, your personal posts, your birthday, how your holiday was last year in Mallorca. They know all of those kind of different things because it's what you've posted online.
And I think that goes a long way to say that, there's the like, know, and trust, isn't there? If someone's following you for 2 years, they feel they know you. I'm not saying they necessarily do, but they feel they know you because they've seen, progress, seen your, I hate using the word journey, your journey. And they've seen, like you say, about your personal life, your business life, what you're doing. So that element is already there. They probably trust you a bit more than if they just met you, because they've seen that you're active and what you're doing in that field. And like you say, one of the biggest key things is there's an audience. Some of these Facebook groups are huge. Even if you get, you start getting 60, 70 comments, the algorithm's going to push it to the top of the group. People are going to get notifications and see it. Even if it's like, video content does a lot better than photos, doesn't it? So if you do a 2-minute video.
Going back a couple of months ago, we'd be posting videos in these Facebook groups every day, and then you literally look back at one of them, it's got 5,000 views. So that's probably one thing that's helped us scale as massive, as big as we can. Typically, for a professional services firm, what they do is they go to networking events. So you'll be in a group with 20 other different business owners, and you'll basically go around talking to them in the hope that one day one of them is going to say, you know what, I need an accountant, let's go to Josh. Whereas what social media has allowed us to do is get a video and get it for free in front of 5,000 people. You couldn't go to a networking event. You could go put flyers through people's doors, but it cost you money, it take time. Whereas social media, you can just get rapidly in front of so many different people for free. Any bit of content you want that you can film on your phone, a post on Canva, a Facebook post, you can get it for free in front of so many people. And that's what you've got to utilize to actually scale quick. It's the kind of way they go, when you go from selling, you go from like 1-to-1. In order to scale your business, you need to sell 1-to-many, which is what we do on Facebook, which is what we do with webinars, email marketing. All of this feeds into it to help us try and sell our message, sell our product and service to as many people at once.
Yeah. It's a great tip. And I guess that's why, one of the reasons I started a podcast, there's many reasons I started a podcast, I listened to them when I started out. There's obviously gaps in people's markets. The market's ever changing. So having someone on, on a weekly basis, for example, what you're doing internationally, I haven't seen anyone else doing that. There might be a few others, but, not many people know about that. And it's just giving up my listeners, the listeners out there, an opportunity to see what is out there that can help scale and grow their business, which I think is quite important. That's the reason I sell it up. And I like talking. My wife always says I talk a lot, so I thought, why not do it on a podcast and get it out there? So no, it's great message there in terms of social media. Would you say staff has been a massive help as well? Because when you start a business, it's difficult, isn't it? You're doing everything on your own. We've just recruited someone, so I can't wait for them to come into the business and take a lot of the my workload, and you can focus on the fun stuff. As a director, you're the puppeteer, aren't you?
Yeah, exactly that. I suppose getting the right staff on board, it is different in the success and failure. If you've got a good member of staff where they're doing things that, they're just basically taking stuff off of your plate, then that frees you up to basically focus on things that are going to help you make the most money. Because as a director, if you're working 50 hours a week, each of those hours has got an earnings amount that you can attribute to it, whether that's doing paid for tax calls, whether that's doing a new course, whether that's doing whatever it is, you've got an earnings potential to that. And if you spend half your week doing admin, managing your diary, all these kind of smaller things that you could pay somebody 10, 15, 20 pounds an hour to do, it frees up your time to focus on maximizing your earnings.
Yeah, exactly that. And they talk about it, it's like working out your hourly rate, isn't it? How much are you worth? Anything less than that, delegate, outsource. I'm still to do that. I'm looking at it. I haven't sort of hit the nail on the head yet, or when, but there's a few other things I've got in the pipeline to tick off first before I do that. But I see the value in it because, like I said, business at the end of the day is making money, isn't it? And if you're not doing the stuff that's going to make you money, you're going to grow slower.
Yeah, absolutely. In life, really, you should do two things. You should be focused on what's making you money, and then whatever doesn't make you money, you shouldn't really be doing. So other than that, you should be having fun. So make money, have fun, and then outsource, delegate, do whatever you can with the rest.
And go to Dubai.
Yeah.
So what? Obviously, you've seen a massive growth and success. Just what challenges have you faced? What have you found being one of the most difficult things in terms of scaling your business and growing the business to where you are now?
Yeah, so I suppose the two was doing it at such a young age.
How old are you?
How old are you? 27 now.
27
when I first started the business at 23, which, if you're an older property investor, 34 years old, you're not going to, compared to somebody with age, well, people often mistake age with experience and knowledge, basically. An old grey man who's an accountant, they think they can do the job better than somebody like myself because they've been doing the job longer. So that's probably one of the biggest challenges we faced for the first couple of years while we were getting established, and that is difficult to get taken seriously.
Yeah.
But the way we did that was by basically just pushing harder than everybody else, by giving out better content. What enabled us to do better was all of these older people, they were established, they did less technical research. Yeah, they've been doing the job 50 years, but the tax laws change every year. So we were a lot fresher because we'd been reading all of the different legislation, all of the different guides, been absolutely kind of smashed it from a knowledge point of view. So we could literally out-hustle everybody else that had been doing it for that extended period of time. So that's how we overcame that one. And then the second problem, which is a problem for every business, is finding really good staff that are going to help deliver the service to your clients. And then that's a problem that, we still face today, but it's one we're working on and doing what we can to overcome.
It's a recurring theme that I think I've got 4 episodes where people have said staff has been one of the biggest challenges. I'm yet to face that, but I can imagine it's because you're dealing with people. Everyone's different.
Yeah.
They might be hungry. They might not enjoy it. There's a culture. There's a specific culture, knowledge, learning.
Finding people to get them in the door. Then when they're in the door, you've got your own problems. People have their own problems. So, problems times problems. And then as a result, you literally kind of go from being a business owner to now you've got to think about kind of how you're looking after them. Did you say something the wrong way? If you're flipping with this member of staff, how that can be. You've got all these different things to stay on top of that you didn't have to consider previously.
Yeah, totally agree with you on that. But, it's not plain sailing, is it? But you seem to have done fantastic anyway. So just for the listeners, like I say, I'm going to put all the information in the show notes. Just to recap, you've got a webinar coming up on the 15th of May. £99 is the launch price. I'll put the link in. If you can't make that date and time, you will release it to the people that pay. If you're looking at, saving tax or looking at, a global business, how can people find you? What social media platforms are you on? do you have your own Facebook group as well?
Yeah, so we're literally on every single platform. So Facebook, Joshua Tharby, Instagram, Twitter, LinkedIn, YouTube, Joshua Tharby. We've got our own Facebook group. It's called the Property and Business Tax Group. So yeah, we've got about 15,000 members in there. Yeah, the Property and Business Tax Group. So that's where we post a lot of content. So literally every platform, you can find me there, Joshua Tharby.
Perfect, brilliant. I'll be uploading this on YouTube as well. I've just recently started a YouTube channel. I just put the podcast stuff on now. I'm not really doing much video content at the minute, but it's good to have stuff on different platforms. So I'll be putting this on there. I'll also put the links of your details on YouTube as well. If people decide to watch this episode as opposed to listen to it on Spotify or Apple Podcasts. So, Josh, listen, it's been one of my favourite chats actually in terms of the content. Property tax or tax is something that it's not something I deal with. I'm not a specialist in it. I leave it to the professionals. But even just hearing some of the reliefs that are out there, or ways that you can scale your business and grow your business by saving tax, I think there'll be a lot of people really interested, and I hope that there's a lot of people that take you up on that webinar, that course on the Sunday, the 15th of May, or is it a Sunday?
I
just made that up.
I don't think it is a Sunday. 15th. Oh no, it is a Sunday. Yeah,
it is right. A Sunday. Yeah. Okay. Yeah, on the Sunday. But like I say, it's been an absolute pleasure having you on. And if anyone wants to contact, get in touch with Josh.
Perfect. Really appreciate the opportunity.
No worries. Cheers.